Good morning, it's Friday, and here we go again. Thanks for watching. I'm Keith Fitz-Gerald. I appreciate it. Let's finish the week strong. Now, I don't know about you, but I'm loving all the craziness we're seeing in the markets lately, at least from an investing perspective anyway. Let me explain why and what I'm talking about and give you a few things to think about. I've been actively involved in global markets for 45 plus years now. And if there's one thing I've learned about rocky, choppy, scared the bejesus out of you conditions like those that we're living through now, it's this. The 5 most dangerous words for any investor in the English language are, it'll be different this time. No, odds are no, it won't. Innovation will continue to power profits and print an entirely new generation of millionaires as it almost always does. Skepticism about change runs deep, and yeah, it's plenty scary. I get it because I feel the angst too. What I want you to understand above all else today is that it's entirely normal. Let me give you a few examples that'll put some light on that. In 1903, the president of Michigan Savings Bank advised Horace Rackham, Henry Ford's lawyer, not to invest in Ford Motor Company, saying that the horse is here to stay, but the automobile is only a novelty and a fad. Rackham, of course, ignored him, and the rest is history. He put in $5,000 and cashed out 12 years later for $12.5 million, roughly $225 million today, if I've done my math correctly. In the 1920s and 30s, the smartest money on earth was still pouring into railroads while scoffing at commercial aviation. One famous line from a Harvard economist, my memory is correct, in 1937 said, "There is no conceivable reason why any sane person would want to fly when they can take a train." A single $10,000 investment in Boeing in 1945 on the close of World War II, right after skeptics said aviation is dead now that the war is over, by the way, would be worth something on the order of $50 million today, including splits, dividends, and reinvestment. I mean, this is life-changing wealth. Imagine having shares you can pass on to your children, your grandchildren, your unborn great-great-grandchildren. Daryl Zanuck co-founded Fox, if you know your history, declared in 1946, television won't be able to hold on to any market it captures after the first 6 months. People will soon get tired of staring at a plywood box every night. 10 years later, TV ad revenue blew past the Hollywood box office and has never looked back. The fact that people are skeptical about AI today is par for the course and an opportunity. Skepticism always works that way. There's usually a big, loud, and increasingly obnoxious group of people who get stuck in the mud. They long for the past, and they're confused with their own legend, whatever boat they float to feel good about themselves. Then there's another group that embraces change because they recognize the opportunity it inherently represents and the profit potential associated with it. I've seen plenty of big examples during the course of my own career, starting in the 1980s. Chances are you have too, you just don't realize it. The decision always boils down to the rawest essentials. My POV is simple. You take the risk or you lose the chance to make the money. Now, will you screw up? Yeah, absolutely. Will there be losses along the way? Absolutely. Sure there will be. But here's the thing to think about even so. You miss 100% of the swings you never take. Now, if you're cool with that, good for you. I'm not. Here are a few of my favorite personal examples drawn from my own experience over the past 4+ decades to really drive the point home. In the 1980s, there were personal computers. People were adamant that personal computers were a fad. IBM's own chairman, think about this for a second, famously said in 1981, there might be a world market for maybe 5 computers. Executives swore up, down, and sideways that no one needs a computer at home. And very few on Wall Street believed that the entire market would be anything more than hobbyists and scientists. Now, meanwhile, there was a little tiny fruity computer company called Apple that was trading at a split-adjusted price of just 9 cents. And Microsoft went public in 1986 at $21. Now, folks who laughed all the way to the bank weren't the skeptics. It was those who bought in. In fact, they're still laughing today. Many are still buying shares too, by the way. Let that sink in. In the 1990s, there was the internet. Early internet companies were openly mocked, scorned actually. And I can recall more than a few serious investors at the time who called it a toy, a novelty, or electronic brochureware with such disdain that it defies the imagination. Newsweek even ran a story by astronomer Clifford Stoll, which was published in the February 27th, 1995 issue, declaring that the internet would never support commerce. I mean, really? But at the time, it was serious. Stoll, who had previously gained fame for tracking down hackers in his 1989 book, The Cuckoo's Egg, which, by the way, is an interesting read, argued that the internet would never replace real-world interactions, education, news, or, crucially, commerce. He mocked the idea of online shopping as complete baloney. Now, this was all even as Netscape went public, and it shot to the moon. The prevailing view at the time was that the internet would never amount to more than a niche communications tool. Amazon, yeah, those guys, was a punchline selling books out of a garage at $2 a share, adjusted for splits and stuff. Cisco was dismissed as overpriced digital plumbing. Now, it's funny how that turned out, huh? Then in the 2000s, smartphones. When the first smartphones arrived, skeptics insisted nobody would want a computer in their pocket. Former Microsoft CEO Steve Ballmer famously laughed at the iPhone on CNBC, saying, quote, $500 fully subsidized with a plan? That is the most expensive phone in the world, and it doesn't appeal to business customers because it doesn't have a keyboard. I mean, woo, foot and mouth moment. Even after the iPhone launched, the serious consensus was that BlackBerry would crush it because real business people needed keyboards. Anyway, you know how that played out. Apple went from $6 to $90 pre-splits, while RIM, BlackBerry, went from $230 to pennies. Steve and I both had a good laugh, by the way, about that years later in the green room between TV appearances. I've forgotten which one, but he's a humble and super smart guy, which is important. Anyway, 2010, cloud computing. I vividly recall sitting in scores of presentations back in the day, listening to analysts insisting that no enterprise would ever trust the cloud with sensitive data because it was too insecure, too unreliable, and too crazy. The street, in all its glory, largely dismissed Amazon Web Services as a low-margin sideshow compared to Bezos' bookstore, and Microsoft Azure as a Me Too experiment that would never catch up. Oracle's Larry Ellison called the whole thing complete gibberish, and you know where he stands today because we've talked about it many times. He's 100% on board. So, fast forward, AWS alone is a $100 billion a year run rate business, and Microsoft's cloud segment is bigger than the entire company was in 2009. Oracle, by the way, is getting nearly half of its total revenue from its cloud businesses. So, not for nothing, and bluntly, the naysayers, and there were plenty of them, missed the biggest infrastructure shift since electricity. Now we're talking 2020, right? 2020s, and the AI revolution. We're living through it again. The loudest voices insist that AI is overhyped, dangerous, or still years away from real utility. Most of them are highly experienced experts for at least the last 2,000 tweets in 4 years, but I digress. Others are old school value managers who are so stuck in their ways that they can't understand the world we're going into, even if they wanted to. And sadly, many of their clients are paying a terrible price as they're increasingly being left behind. My grandmother, Mimi, a very successful global investor you've heard me talk about many times in her own right, would have had a field day with these fellas and these men and women, these small-minded people, noting that the smallest minds almost always have the biggest mouths. Now, many of them argue that AI won't scale, it won't be profitable, and it won't meaningfully change how businesses operate. Hyperscaler debt, as I noted yesterday, is just the latest windmill that many are tilting at. Others insist that NVIDIA's picks and shovels bubble, OpenAI, will never make money. And the whole thing is just fancy autocomplete. I'll take that bet, and I hope you will too. There's a new breakthrough every day. Another Fortune 500 company reorganizing around AI, another industry waking up to the fact that it either adapts or gets left behind. AI is creating industries we don't even yet recognize or have names for. My point is that I've heard this song for nearly 5 decades in a row. And the people who bet against the new thing almost always inevitably end up humming it from the cheat seats. All right? Innovation powers revenue, and revenue powers profits. Stock prices key off both over time, even if they disconnect at moments in time. The most expensive mistake you could make today is to lose sight of the bigger picture, the biggest picture, frankly. And I'd hate to see that happen. There's an entirely new generation of millionaires being printed right now. And the question you need to ask yourself is, do you intend to be one of them, or will you be content to look back years from now knowing you could have been one if only you stayed the course, or dare I say it, should have bought more shares while everybody else ran for the hills? Take a look at the image in the written version of the 5 with Fitz today. We live on the cusp of the 6th wave. It is the most transformative event in human history. Now, to be clear, and to make no bones about this, the markets will not be a straight line higher. They never will be. Volatility will increase, and it will be our traveling companion, which means you will need to incorporate that into your investment strategy, along with proven tactics and choices that help you play offense even when you're thinking defensively. I will be here, of course, if you need me. And so, by the way, will the entire One Bar Ahead family, many of whom tell me that what they've learned as an OBAer has changed their lives, instilled a new sense of confidence, and yep, unprecedented calm in the face of markets that are tripping many people up at the moment. So today's bottom line is very, very simple and very, I think, powerful. I will make no bones about this. It's time for some tough love. If you want to run with the big dogs, meaning you want to build real, sustainable wealth and keep it, no matter whether you're a big investor or a small investor, a young investor or an older investor, you need to get off the porch to run with the big dogs. Do 3 things. Number 1, make peace with Wall Street, even if you're not on Wall Street. Number 2, buy the world's best companies, because anything else is a risk you don't want. Not in life, not in your portfolio. Number 3, use proven, effective tactics to control risk and maximize profit potential at all times. As always, and with that, let's make it a great day and finish the week strong. You got this, I promise. Thanks as always for watching. I will see you on Monday. Cheers.